This is your host Neel Reddy Rebala, exploring all elements of the startup world here at Startup Chemistry. Probably as an investor, you need to stay on top of trends. You need to have a vision about where these are going to find applications. So that's when you can, you can back it up with putting your money into it, right? So how do you keep up with all that?
Sentiments around Make in India and then so many deep tech initiatives being taken. First of all, kind of coming up with a policy, right? I mean, India becomes the first country to have a national level deep tech policy. If you look today, I think that today India is almost third largest, as far as startup ecosystem is concerned. Right? And we're growing almost over the last 10 years. We've been growing at a CAGR of 50% plus, which is just tremendous.
Amazing, yeah. Lot of funds are getting into the climate space, right? Like there's so much hype around climate. Would love to understand how you're viewing it, how India is viewing climate space.
Audiences, of course, it starts from discovery. You need to make yourself discoverable. Follow certain traits, right? Then you need to kind of decide this is the right time or not. Should we wait, and who could be the right potential partners?
This is your host Neel Reddy Rebala, bringing you another episode of Startup Chemistry's podcast. If you're somebody who's interested in the world of startups and entrepreneurship, do subscribe and follow Startup Chemistry. We have with us today Abhishek Srivastava, an early stage VC and co-founder of Endiya Partners, renowned for early investments in unicorns such as Darwinbox, CureFit, and other category-defying bets in companies such as Luri, Skirt, Net, and Steradian, among others. Abhishek carries extensive operational experience, and with a focus on deep tech and enterprise SaaS, he has seen multiple fund cycles and global exits. Without any further wait, let's jump into our conversation with Abhishek and learn more. If you're keen on understanding how the climate space is doing in the country currently, and if you want to understand in depth about how a startup takes its exits and how should it plan for one, this is the episode for you. Hi Abhishek, welcome to the show. How are you doing?
Hi Neil, all good. Thank you so much for the invite. It's a pleasure to be here.
Thanks, Abhishek. Thanks for making time for the show. Let's begin probably understanding your background, Abhishek, on how you became an investor and what led you to this.
Yeah, that's that's $1 million question that always keeps bothering me as well. No, I think honestly, now in the hindsight, when I think about it, to start off with, I feel somehow VC has been more of a calling for me, and I'll kind of jump into how and why do I make that statement. It's the triage, which is more around my product passion on one side, then on the other side, India as a country being at the inflection point of new wave of entrepreneurship coming from product startups, right? That, and then the third, really lack of, I would say, a more operator-led VC model for an early stage B2B product startup. Right? I think somewhere it's been a journey discovering these three, and the moment I found these, and of course Satish and Dr. Ramesh, whom I met in the Thai forum, across several other initiatives that we were running together. That's how we came together, and that's how the germination of it started. And me as an investor, but going back a bit more in my past, Neil. I've been a nomad. My father has been on a transferable job. He's been hopping cities and states like anything. And, in a country where I think almost 25, 30 kilometers, language keeps changing, the styles, lifestyles, the beliefs keep changing. Uh, it's really hard to imagine what travel can bring to one's perspective, right? So somewhere deep down, I have a very strong belief that a sense of empathy and a bit of curiosity has kind of played a very instrumental role in me also enjoying the journey as an investor, right? And here we are. Of course, fast forwarding, it's been a great journey so far. Almost 2 decades across blend of experience of consulting, banking, operator, and then more on the investment side. But the last, I would say, decade or so has been extremely eye opener from what India has been going through. Right, there's a clear metamorphosis in this country that's been happening from a startup landscape perspective. So I've been very fortunate to be a part of several fund cycles now, and seen seeds to unicorn story as well as realized and gone through several global exits in various parts of the world. And can't complain. I think the journey has been extremely enriching as well.
Interesting. You mentioned nomadic lifestyle, empathy, curiosity, Abhishek. I believe these are somewhere aiding you in your role as an investor, isn't it? And maybe helps you with pattern recognition or whatever. But yeah, can you share how it helps?
Yeah, no, I mean, that's my belief. I mean, there's no right or wrong, Neil. As you know, this is more of a very philosophical and subjective, area, right? I personally believe, I think the journey as a nomad, and also even post that, when I started my career, I mean, I've had multiple geography experiences, having worked in US, Europe a lot significantly, Singapore for a small stint, and then of course India. Uh, I think we keep on saying this empathy. What does that really mean? And I was kind of thinking this deep down. It's kind of acknowledging the fact that nobody else is being a part of your journey. You are being a part of someone else's journey, right? So which means that you have to take that first step to ensure that there is alignment, there is intent, and there is all good faith on both sides, and the firm belief, right, on both sides, to take that journey together. What I mean by that is, of course, somewhere in the heap of things, one keeps forgetting that even entrepreneurs are humans, and building a company and being an entrepreneur is a very lonely journey. Right? It's a fairly thankless job till you have proven to the world that you have seen success. Right? You are actually fighting the battle day in and day out. I think that's where the realization that uh, you have to be a part of their journey and then make that combined journey a lot more sweeter, a lot more eventful and learning. Right? There could be ups and downs. There will be ups and downs. But at the end of the day, more than the conclusion, I think the journey is what that matters. I think once you start, sort of having that kind of forming that kind of belief, that's when you start enjoying the role as a venture capitalist or as an investor. So somewhere deep down I believe some of these traits of kind of empathizing with people's belief, their own like I talked about, their own lifestyles, way to approach certain problems or events. I think somewhere deep down it's kind of inculcated that quality. And then the other aspect is obviously when you land in a new place, you're always very curious to know, hey, what's happening. What festival is this? How are they celebrating? I think that sense of curiosity is very good, and I've seen that the best of the best investors, most of the veteran investors, even deep down today, they are as curious as a child, right? So I think that's something which I really feel thankful about.
Got it, Abhishek. And you also mentioned deep tech and product to be something that you are an expert in. So how did that come to be?
Yeah, I would not dare use the term expert, but yes, I think these are two areas where I've organically been very passionate about, very interested, very glued to, and I think partly because I'm an engineer by heart. I mean, while I have gone and done all the postgraduates the world, but I think by heart I still remain engineer. And somewhere the root cause of every problem and solution, you kind of go back to the technology, right? And that's where kind of it germinates from. Two, I think even my early part of the career, Neil, it's been more driven by building enterprise products, selling those products in the so-called SME in India. Then we try to take it to the SMBs in Europe and so on and so forth. So somewhere, that's uh, it's kind of become love at first sight, right? So that was the thing which I first learned as a professional, and I've just not been able to get over it. As a core techie and engineer. I think at the same time, it's interesting you talk about deep tech. I think deep tech is more the nature of what it brings to the table, right? So it's very transformative in nature, and I think India as a country has always admired something which can help it uh, sort of leapfrog into a new technology altogether, right? I mean, we have not even seen. I don't know. I'm sure you would have been too small, but we used to have handheld devices much before mobile, right?
Yes.
And it just had a very short span of life in India. Likewise, this whole coaxial and copper cable on the communication line, telecommunication side, was supposed to be followed by optical fiber cable, but then we leapfrogged to mobile phones. And now today we have probably one of the highest penetrations and subscriber base from a mobile phone perspective, right? Likewise, I think deep tech, I firmly believe, Neil, that it's very transformative in nature. I think that has the power, number one, to help this country leapfrog multiples on several fronts. And the other aspect is, if you look at it, deep tech is more of a horizontal technology, right? It's the application of the deep tech which matters more. So it has the power to kind of even transform or disrupt healthcare, right? A way of education, probably an individual's life from morning till evening. So, which is what excites me. That at the cusp of it, it has the power to transform almost all the kind of verticals. It's vast. I think these are two very very vast areas. Both enterprise software as well as deep tech products. And of course, in pockets, there are elements where I probably double down a bit more versus the others which where I'm still trying to kind of catch up. Uh,
Mhm. So transformation and leapfrogging also means a lot of change, and then probably as an investor, you need to stay on top of trends. You need to have a vision about where these are going to find application. So that's when you can, you can back it up with putting your money into it, right? So how do you keep up with all that?
no, that's a wonderful question. In fact, that's a lot of LPs also keep asking us, right? And I think day in and day out, if you see the pace of transformation is just is also growing and becoming very very fast. Uh, what was relevant 5 years back has absolutely become a commodity today, or maybe to some extent even irrelevant today. So to start off with, I feel very fortunate actually as a VC. Uh, Half of your job is done because you get to meet almost uh, on a daily basis smart entrepreneurs with very wild ideas, leveraging very very wild technologies, right? And that's when the I would say the real journey starts. I mean, a lot of people, a lot of us, we keep reading. We are by nature very curious and we read a lot. Now, of course, we have to do podcasts and other channels and forums as well, kind of absorb information. But the real meat or the merit starts, Neil, when you start the application of those technologies, right? I mean, AI has been there for several years, but applied AI is what matters. Where, how is it getting used, and is it making faster, better, cheaper? So the nature of a job is such where I think 50% of our learning gets done just through entrepreneurs. I mean, we keep meeting these smart entrepreneurs, learning a lot about some of the groundbreaking technologies that they're working on, and that kind of instills a sense of curiosity. And then we go back and try to upskill ourselves, right, for the lack of a better word. Two, I think technology is extremely wide, right? So you can get lost very easily. So I think at least as an investor, I mean, as a passionate or a hobbyist, you can do whatever you want. But as an investor, our firm belief has been that pick certain areas, play on certain domains where our strength lies, and where also we feel that is the right time for creating value, right? Overall, I think we try to narrow that base down, and it becomes a lot more easy to kind of keep ourselves up to date on those pockets of technologies or sub areas, if I may say so. I think third, I think more than upskilling or finding ways to uh, catch up with the pace of technological developments, it's more about how do you now sort of shut out the noise from the signal, right? So there are forums like I mentioned. I mean, there are so many other media forums. There are so many other events, networks, that keeps on happening. There is TIE, there is NASCOM, which is very very prevalent for deep tech, right? And then there are forums for similarly for the consumer side. You have now SaaS Bhumi, which is quote unquote a SaaSter of India, right? Creating a very strong community on the SaaS side. So there are these forums, at least the relevant ones. I try and be not only be a part of, but hopefully try and be very closely involved, right? And then you have so many information available almost at a click of a button in the form of all these articles and so on and so forth. I think the question becomes how do you sort of make sure that you're not getting too much caught up with the noises and you're picking the right signals. I think that's the battle that more often than not these days as investors we are fighting that than so much kind of getting upskill. I hope that kind of answers a bit of
Yeah,
what
it does. I think it deserves a whole episode by itself, understanding the technology and various other
absolutely.
things. But it does answer the question. Probably at this point of time, we should also introduce what India does to the audience. So, can you introduce India to us?
Yeah, so India is a early stage venture capital fund. We are thematic investors, and we have selected focus sectors like technology, healthcare, and selected financial services. Again, within technology, we look at so we have certain themes that we follow, which is intelligent mobility, digital industry, and enterprise digital adoption, which kind of sits inside the technology. And then healthcare has digital health, medical devices, life sciences, and pharma. Right? We haven't done anything in pharma yet, but life sciences kind of been picking up this theme. But I think going a little bit back in time, how India was formed or started. It was essentially uh, set as a foundation to help the third wave of entrepreneurship, what we call right in India. So first is where this whole ID services, followed by the BPOs and the KPOs, kind of mushroomed, brought in a lot of business. I think became a very formidable part of India's GDP even today. Second is when mobile phones started sort of coming into the picture, and then you had this whole layer of e-commerce and internet marketplaces kind of sweeping the floor. Third is where we felt that the time is right now for the real product startups from India to sort of germinate and build for the global markets, right? So that's that's the foundation, I would say, which kind of brought in all of us together and thinking which set India, to kind of be a formidable part of that third wave of entrepreneurship, product entrepreneurship from India. But from a sector and I would say philosophy and theme perspective, we follow what I just alluded to. We come in very early stage, so we typically are first round institutional investors. I think most of our investments, even from Fund One and Fund Two, we've been the first round institutional guys, and we don't mind coming in pre-product, pre-revenue, right, any stage. And sweet spot typically, Neil, for us as a first round is anywhere between, I would say, 1.5 to 2 million, so anywhere up to 2 million. But I think we are not a spray and play. We are very fairly focused, which means that we would definitely double down on the investments which we make early on. That's our effort, that's our intent, that's what makes us successful, and be a part of their journey, for much longer horizon, right? So that's what India is at the cusp.
Got it. And could you also give us a pulse check on each of these sectors that you look into?
Yeah, so I think like I mentioned, we do have a very thematic driven approach. So we have certain themes carved out. Enterprise digital adoption is one theme, which is basically leading any sort of major digital transformation in any industry, right? It could be horizontal, it could be vertical, it could be a productivity side as well. A lot of SaaS investments kind of bucket and sit out for us over there. And even otherwise, and there could be other enterprise software side investments. Second is digital industry, which is more on the lines of how to bring that transformation in the industrial world, how to make it a lot more effective and productive, right? So this whole with the IoT culmination, I mean, sort of commencement and the whole sort of smart city element coming into the play. For instance, cybersecurity becomes extremely critical, right, for that world, which does not even have standardized protocols from a security standpoint. And then we have the intelligent mobility layer, which talks about building maybe a new finance stream for a new asset class altogether, green infrastructure or a green finance sort of thing, and then so on and so forth. But at a core level, like I mentioned, Neil, uh, we have two ways to look at it. So one is, of course, these are the business first or the theme first approach, and the other side is the whole impact side of it, right? And that's where even healthcare investments for us have a certain amount of societal impact, and a lot of technological investments for us has a lot of climate impact, right? And therefore that has become one of the new emerging areas for us where we have started spending a lot more time to understand the overall landscape, the value chain, where the value and the opportunity really lies. I think it's still fairly early in the Indian context, but there are certain pockets that we've started seeing, and more importantly, I think it kind of some of the themes that we have overlays very well with the impact that it also creates on the climate tech front. So we're extremely bullish about some of those opportunities.
Mm-hmm. Interesting. And how has VC industry in general been the last 2 years with all that is happening or not happening, Abhishek?
Yeah, that's a very that's a very deep question. So interestingly, 2022 saw a fairly good amount of startup funding. If you look at the absolute terms, but that's also because the real shock was uh, probably felt more in the second half of the 2022 calendar year. That's where things started a little bit to fall apart, and I mean we are all aware of the challenges in typically in the public and the private markets that globally as well as India has been observing. And fundamental reasons, if you look at it, there's been rising inflation, there's been rising interest rate. I think geopolitical dynamics have been extremely critical and playing a very elemental role in shaping some of these over the last 1.5 2 years. We are all aware of Russia-Ukraine conflict. We are aware of what's currently happening, and all these have a very important role to play in the overall dynamics, right? And if you look at what geopolitical has done is it's kind of forced the countries to reconfigure their supply chains, right? But you can't. In a lot of those countries, including India, is practically starting from ground zero, so it takes time to kind of reach there. So I think the sentiments has been more recessionary, for the lack of a better word, at least globally. Thankfully, in India, the foundation and the fundamental of India is such that we continue to see certain green shoots. But as a global village and close affinity with US and West, it's hard to kind of disconnect and detach the impacts of the chain reaction in India, and which is what we've been seeing even on the private market side, may not be so much on the public market yet, right? Also, if you look at some of these global phenomena, especially in the US side, which I talked about, the inflation, the recessionary sentiments, and all, I think somewhere deep down it has hit certain big institutions which have had a very formidable role to play so far in the startup ecosystem. We've heard about the Signature Bank debacle, the First Republic bank, and most importantly, I would say Silicon Valley Bank. Right? Why does it matter? Because a good chunk of their debt used to be serviced by the startups, right, or was kind of given to the startups for a faster growth and for various business models. So I think that's also been something which has kind of brought in a very cautious yet positive sentiment all across. And what it has made happen in India, at least, while in the very early stages, the valuations are still resilient because we were not extremely, we're not paying too much premium in the early stage side. But I think if you look at the Series Bs and Series Zs, and beyond, the valuation markdowns have become inevitable, right? It's kind of a very, very strong correction which has been taking place over the last few months now. At the same time, I think nobody's in a rush to close a deal, so it's taking a lot more cycles to close a certain round. Investors are in no rush. There's all sort of recapitalizations happening in the deals because people realize that closing a shop is not a better solution compared to just figuring out how to survive and then building value later, right? So
Sure.
I think that also gives good opportunity for some of the investors to go in at a much saner valuation. Having said all this, and the idea is not so much to give a very gloomy and sort of gloomy picture, Neil. I think having said all this, what on the other side I've also realized is that fundamentally strong assets, right, which are growing fast with the right unit economics, are actually seeing tremendous amount of interest in the market. And it's also because a lot of VCs are sitting on a dry powder. They have gone and they have raised their capital. Eventually, they will have to deploy something. Right? They can't just be waiting and watching out forever. So that makes it very interesting proposition for some of these, fundamentally strong startups, building, rather solving a genuine problem and kind of growing at a certain velocity. They continue to be the blue white boys and kind of garner interest from several VCs, but the volumes have kind of come down significantly. And I think it's going to be like that, at least from my perspective, over the next 18 to 20 months. It's going to take some time before things start a little bit coming back to maybe 2018, 2019 shape, right?
Got it. Got it. Correct me if I'm wrong here, Abhishek. So my impression of how this geopolitics and other things was going to also shape up our startup industry is that India, I feel, is like very software focused. Whatever startups that have come up and other things, be it on the e-commerce side or other enterprise SaaS startups and stuff like that. But probably with the supply chain reconfiguration and all that happening, maybe it's a good chance for the hardware side of things to start growing in India too. Would you agree with that?
I think so. Short answer to that, Neil, is yes, for sure, and which is why you would have started seeing a lot more impetus on sentiments around Make in India, and then so many deep tech initiatives being taken. First of all, kind of coming up with a policy, right? I mean, India becomes the first country to have a national level deep tech policy being framed. So clearly, yes, I think everybody realizes and understands that it can't be software alone. The problem needs to be, it needs a multifaceted solution, and you can't really avoid for too long the deep tech, the deep science, the hardware plays, right? And keep out of it. So that is true. Having said that, I think while on one side this is the demand, and I'm glad some amount of this reconfiguration as well as this whole Make in India, the manufacturing boost is kind of now making people and India think a lot more. I would say with a lot more gravity towards how to build ecosystem around it. But the other fact is also that on a lot of these fronts, for example, in a semiconductor, right, it's anywhere close to 10 to 12 years of investment. I mean, you cannot overnight become a semi or a silicon chip sort of country, right? I mean, it takes a foundation to be built. You have to set up the fabs. You have to reach to a certain MOQs to realize the economies of scale and so on and so forth. And more importantly, I think there's a strong technology transfer element to it. So, yes, I mean, to your question, that is right. My belief is that there'll be a lot more risk takers for hardware opportunities now as well. Clearly, those hardware, need to be innovative, need to have their own set of IPs. I'm not going to rule out some of those basic things which need to make it a lot more interesting, for any VCs and investors. But at the same time, I would say uh, it's not yet seeped in the mainstream VCs yet. The interest around hardware. It will take some time because it also needs to have a right amount of infrastructural and ecosystem support and the visibility to make sure that the company is making right progress. There is right amount of capital available at the right time, and I think that's where the delta with or the chasms that we see, in some of these areas, kind of make it a fairly cautious approach.
Got it, Abhishek. Abhishek, one of the things that you mentioned as your focus areas was climate. Um, let's double click on that a bit. A lot of funds are getting into the climate space, right? Like there's so much hype around climate.
Yeah, that's an interesting question, Neil. And uh, so that I would say, while there are multiple parts to it, but let me try and keep it simple, right? So there are certainly two parts to it. One is whether it's a hype or not, right? And of
Mhm.
course, we'll go deeper into that as well later. And then the second part is, of course, how are we kind of seeing it? So, for us, fundamentally, anything starts from the core business proposition first, right? That's the approach that we typically take in our funding. So, what's the fundamental problem being solved? Is there the right business model stitched around it? Does it have a clear value proposition? And I know a lot of these sound English, but it's more of a philosophy. It's more of a, I would say, mindset, which matters, right, over here. So that's how we have gone and kind of build our own pieces. That's how we have gone and build and try to identify, pockets of opportunities. Uh, Having said that, I think what we also realized that, which I alluded to briefly in our previous questions, is that a lot of those themes actually have a very strong impact on the climate side. And what we've done is, of course, we've kind of culled that out and definitely, looking at it from both the lens. I mean, we don't want to rule out the fact that it has a climate impact. At the same time, what's more important is that we see a real business opportunity there. It's not so much created by, just because there's been a COP26 convention or Paris convention now giving the mandates and 1,200 odd companies signing up for net zero, by XXX years. Uh, that's that definitely plays a role, but at the end of it, we have to really reconcile and sort of overlap it with what's the supply, where's the local talent, and then where is the the market opportunity, where is the TAM, right? Do these all come together and then kind of create some sort of pockets for us? So that's point number one. That's the approach we have taken. I think double clicking on from a climate tech perspective, the way I have kind of gone and looked at it to some extent is that climate tech can be again broken across several verticals, several industries, I would say. So, right, so there is a the the first part is more the horizontal layer, which is more of a climate tech, reporting or compliance and change management itself, where a lot of sustainability accounting, carbon accounting and management, decarbonization stacks, uh, then offsetting, platforms, etc., kind of set, which have a very clear goal to help in the decarbonization of the economy. The second is more around the energy. I think if you look at what has happened in the energy side, maybe roughly 15 years back is when I had first, and I remember I had ran a mandate for a wind power plant as well when I was a banker, almost 12 years back. I think the fundamental challenges of that sector were humongous. The amount of capital investment, you fighting out the battle with the low cost, OEM players from China, the silicon prices itself kind of fluctuating significantly, right? Very capital intense business models where it needed and it demanded a lot of upfront investment with very limited visibility on what you're going to reap over the years as an ROI. Right? From there to today, where in general the power generation from a renewable source, at least from the solar side, has kind of achieved quote unquote grid parity. Right, it's almost same cost of generation compared to any non-renewable source, which is a big plus. It has come down close to 80-90% over the last 10 odd years, 10 to 12 odd years. Right. Two is, I think, there are a lot of various interesting asset-light business models, software-led business models, which is now coming to play, which makes it a lot more easier for people to absorb that this can scale fast, and then this can carry behind it some sort of services or hardware or chemistry as another added layer, right? So people start believing in that. Right? Third is, of course, capital by itself has kind of increased significantly, and so on and so forth. So on the energy side, if you look at it, I think clearly we see an opportunity on the demand generation side. And what one of the recent electricity amendment bill has also done is it's kind of privatized the entire distribution side of it, right, which was largely being governed by the state discoms. So what it means is that now private players can enter. What it means that people can start thinking of optimizing the demand and optimizing the grid operations, and see and sense and realize certain amount of opportunity. So one is the core stack of the demand generation at the consumer side. That consumer could be retail consumer, it could be a commercial or industrial consumer, right? The second is this whole grid ops management, which I talked about, which is more of a data management platform or distributed energy resource management, where you manage the peak demand and supply and make sure that the nobody is getting I would say a downtime, right? Or at least there's minimal downtime. There is optimized billing that's happening, for everyone, right? And it becomes a lot more. I would say profit making starts to become a lot more profit making for most of these discoms and the generators who otherwise have been just absorbing losses for so many odd years. Right? So that's more on the energy side. Of course, energy transition also becomes one of the elemental areas. Then there's this whole mobility side, what we also call, of course, intelligent mobility. There are certain elements which sit very well with the climate impact. I mean, we've taken certain OEM bets, which by itself is kind of playing its own instrumental role in curbing the carbon emissions. We've done cell propulsion. We're more recently in a kind of invested in a company called Blue Jay, which is hydrogen fuel powered VTOL, right? Vertically takeoff and landing drones is what they are building for commercial purposes, and so on and so forth. But if you look at it, now comes the next cusp of, or next, I would say, 2.0 of mobility, right? So while these OEMs are there, you need certain amount of financing to scale these OEMs. So there is a green finance element that comes into play for a new vertical altogether, because they have a very different way of underwriting. The salvages value, the residual value of these battery as a technology has not been well understood yet, right? That's where I think it kind of gives opportunity to some of these core tech startups to figure out a solution of these problems and also roll out a new product offering altogether, right? And another side is, of course, this whole charging infra aggregator as an aggregator, and so on and so forth. If you look at the next vertical, which is more on the industrial side, again, I briefly talked about how SaaS is also helping in some of the SaaS slash chemistry driven opportunities or slash services or marketplace driven opportunities, right? So overall, on the industrial side, we have seen a lot of opportunities around building productivity, reducing downtime, making it a lot more smarter, and so on and so forth. Uh, then we've seen opportunities, and we continue to see a lot more on the digital twinning side, which kind of helps them achieve some of these fundamental efficiencies. But one of the other interesting areas is which I briefly talked about is we've seen cybersecurity in the application world, in the cloud world, but this whole IoT and smart cities where the data is still in transition, right? And that has a very different protocol, be it on the communication side or the overall kind of build up side. The standardizations have not yet been achieved. It would be very interesting to have sort of a cybersecurity play stitched around the IoT, the smart cities, and so on and so forth, right? Because I think that's where more and more we feel the world is going to move, which is the smartification. And clearly, I think in the new age, that is a high potential and a new age risk of sort of approaching any sort of war. Right? So people try to kind of make use of all the information that is available to them, sensitive information that is available to them. Right? So you would want to safeguard some of those things, and we've already seen some of these things playing out in pockets in different parts of the world. Right? So how do you kind of safeguard this new world altogether? Be it inside the automotive, which we call ADAS, or inside certain industrial setup through the IoTs, SCADAs and PLMs and so on. So these are certain areas where, if you think about it, I think there is a clear problem. Right? There could certainly be solutions. There are some solutions which we've seen in the West, and we hope to see something play out in India and build for the globe, right, for the global markets. But at the same time, each of these have a very, very strong impact on the decarbonization as well as the carbon emission side. So this is the lens with which we see climate tech opportunities. And sorry, it's been a monologue, but to your first part, I completely agree. I think there is a bit of a overhype on the climate side. While it's it's a very noble cause, and I think it should see that kind of euphoria. But I just hope it sustains that momentum, and that euphoria sustains, because right now I think we are trying to see opportunity in everything that relates to climate. And I don't think that's the right way to look at it, right? Because the TAM has not yet been there. It's still very latent. Yeah, I mean, you need to create certain categories, and that's where you have to, take certain leap of faith. But I just feel even the fundamental dynamics of uh, some of those problems have not yet, become clear, right? So there is some sense of hype, but at the same time, I think there is no doubt that there is a top-down mandate to make this world a net zero world, and there is tremendous amount of opportunity that's going to open up in the due, over the due course, as far as the climate tech is concerned.
Thanks for the detailed answer, Abhishek. That was very insightful, and you also listed out some of the opportunities that you see, along with the perspective that you have on the sector as a whole. So that's helpful. Thank you very much for that. So these themes, some of these that you touched upon during this uh, uh, process of sharing the perspective, I feel some of these things might require deep science and deep tech, right? What's your view on those startups in India?
I mean, again, I mean, India as an investor, deep tech has also been one of our core focus areas. And when I say we've been thematic investor, that's not to pat our backs, Neil. But, I don't mean it as a lip service. I mean, if you look at it, we made a semiconductor bet somewhere in 2017, 2018. We made a semiconductor bet. Of course, today is what we see a lot in action happening on the semiconductor front. Right? So we were early from that perspective, and we could sense that this is one big area which is going to kind of come up in this country. Likewise, if you look at AI in diagnostics, I mean, we had taken that bet much, much, much before, and today the world seems to be moving in trying to miniaturize the whole point of collection. Have a remote diagnostics in play, make it a lot more accessible, smart as well as affordable. So, in that sense, I think deep tech and deep science has fundamentally been very interesting areas for us and relevant areas for us. Uh, there are several opportunities that I talked about. I think, in summary, I mean, to start off with, at the outset, I would say India as a country has certainly made a I would say notable progress when it comes to deep tech and deep science. Of course, what was seen as a theory or somewhere being just done in one of the university incubators, etc., has now come out, in the market, and have started finding some of the commercialization elements to it, and then, really, really solving problem on the ground. From a if you look at it, what any sector needs for it to kind of thrive, right? So you need to have good demand, which is the good market opportunity, the TAM. You need to have good talent around it, because if there's no right talent, then who's going to kind of build and furnish the right supply, right? You need to have a capital support for that kind of thing. You need to have a policy in place, right? Which is the regulation side, and finally, you need to have a very, I would say, virtuous exit cycle and a clear exit cycle, right? Which sustains that momentum and interest in that sector. Because unless and until everybody, at the end of the day, they want to see some sort of value realization, right? And that's where kind of the interest blends. So from that perspective, I think deep tech has come of age, and a lot of applications have started seeing a huge TAM around it, because the TAM is not just limited to India. Right? From a supply perspective, from a talent perspective, I think we've had great talents. But interestingly, I'm also a part of the NASCOM Deep Tech. I see fundamentally a different India altogether. For the lack of a better word, I mean, the kind of talent, the deep science talent that we have around us is just phenomenal. Right? This is at par with any global talent, for that matter. And the good part is, I think, which is still an evolving space, is that some of these talent have now realized that you just can't be code techie. Eventually, you need to build a business with it. And they have now started graduating to ensure that as a team they are complete when they are building a deep tech business. Right? So they have the right kind of product marketing skill. They have the right kind of selling skill. It's not just the build mind that you can approach any sector, right? So that's the talent side. I think capital is where I still have my concerns. Uh, there is decent amount of, I would say, seed capital, institutional seed capital, which has also, by the way, come up over the last maybe in 3 years or so. But there is definitely a huge chasm when it comes to Series A, Series B. And that's largely because the way to evaluate deep tech or deep science firm is very different from, let's say, a B2C e-commerce, or even for that matter, SaaS, where you can see visible revenue generation in progress. Right? Here, you may have a significant achievement on the product build side or the product progress side. But how do you evaluate that is a big question mark. So as an ecosystem, we are also kind of maturing. But that's one chasm is where I see. I think policy is the fourth I talked about, where India as a country is doing fairly well. Of course, a lot of still left to be done, but we have started thinking in the right direction, and it's great to see any sort of formal paper coming in the first place. If you ask me honestly, I think exits, anyways. I think we're going to delve deeper, but exits is something which, as a country, we have not seen huge exits yet. Deep tech, by that, I would say, is still a very emerging and a new and a nascent development and sector. So it'll take some time for deep tech to kind of start seeing a virtuous exit cycle. Right? So coming back to your point, I think overall, my sense is number one, as a country, we have made good progress on some of these opportunities. Number two, we very strongly believe that these have great transformative and disruptive powers, and there could be huge value realization if some of the gaps can be taken care of, which I briefly talked about. Uh, Third is clearly there is a chasm on the funding side and upstream capital side, where at least funds like us, we try to bridge that chasm through global partners, bringing in global investors, and that's what we've done for Steradian. That's what we've done for a few other companies, and we'll continue to do that. I mean, that's been the playbook which has worked for us. But at the end of the day, we also hope to see a lot more domestic ecosystem mature, towards deep tech funding side, right? So that's my 2 cents.
Got it, Abhishek. So let's take a step back, Abhishek. Let's look at some of the macro trends in this particular space. I have two questions in my mind. One is like, uh, how are things evolving in India compared to the rest of the world, like especially the West? That's one question. Some of the nuances, I see like probably the ESG framework. I'm hearing a lot about it, where it's starting to collapse, or at least that's the headline that I heard. Probably true or not true. Give us your perspective. Again, I'm clubbing a lot of questions, but yeah, again, thinking about the macro picture, you touched upon this earlier in the conversation, like, somewhere right earlier, like manufacturing in China. That is very, very cheap, be it the solar cells and other things. Now, how is India positioned? Uh, we seem to have done some work over the past few years. So, could you compare how where India stands compared to where West is, and then like our positioning compared to, let's say, a player like China?
Yeah, again, that's a fairly deep question, and a lot has been evolving so quickly. If my memory serves me right, Neil, let me start with a bit of a macro picture, right? So, if you look at today, I think today India is almost third largest, as far as startup ecosystem is concerned, right? And we are growing almost over the last 10 years. We've been growing at a CAGR of 50% plus, which is just tremendous, right?
Amazing, yeah.
Two is, I think if I just talk about even deep tech, we have close to 3,000 to 5,000 deep tech startups alone, deep tech and deep science startups, which is again a very healthy composition. If you rule out countries like Israel and of course the West, we would stand again in top five over there, right, compared to any other country by that yardstick. So third is, I think a lot of funding has gone in this country, and a lot of value has been built. Of course, one can go back in terms of what is the real value that the unicorns of today are really sitting at. But if I kind of put that aside for a minute, the nuances of what currently the country is going in from a valuation adjustment standpoint, there is still a reasonably decent valuation which has been built. Of course, the realization of it is a big question mark, but I think there has been some good value built. That's the macro picture, which kind of gives you a sense that India has been moving and moving in the right direction, right? Thankfully.
Hmm.
Having said that, I think the question that keeps coming back to at least my mind is we could have been a lot faster, is what I feel. And what has happened is some of the fundamental sectors which you also touched upon previously, which is the hardcore hardware, some of the core deep tech, deep sciences, which have a lot more, I think, transformative power to change versus, let's say, an incremental change that one can realize with any other startup, has taken a lot of time to come to the forefront, right? In terms of people's mindset and their getting the right sort of importance as well as treatment. I think that has taken a bit of time. And what that has done is that has delayed the other infrastructural ecosystem and support that you need to build that startup and that ecosystem. So hardware ecosystem is a very different ecosystem. Right? I think the gestation periods are high. Like I said, the revenue realizations are much later. You need a lot more upfront investments. So if you think about it, I think as a hardware investor, I mean, you have to start right from your LPs, where you need to have a lot more time at your end as a fund life compared to, let's say if you're just focusing on software or some of the fast moving sectors. Right? Two is building a hardware, and again we've gone through a journey of Steradian. A simple tape out for a silicon chip needs very different infrastructure and capabilities, right? And not all of it, or even a good chunk of it, is even present in the country. So I think by that yardstick, there is limited amount of, I would say, infrastructural support, be it towards testing, simulation, fab, build, etc., etc. And you can generalize it to the whole hardware ecosystem, or no infrastructural support altogether in this country. So that kind of makes it a bit more, adds on to the cycles that we keep talking about, and therefore people feel a little bit shy about seeing that escape velocity that they're usually familiar with in a B2C or a B2B SaaS world. So I think that is something which I believe Israel, for instance, has done very well. They've laid
Mhm.
down very specific applications, even within hardware. They've verticalized certain areas. They've built spocks within universities, which also have the direct line with the corporates, giant. How to kind of make the best use of the IPs which are sitting inside the university so that it could get commercialized, get the right kind of commercial support, and so on and so forth. Right? So I think those are things which I believe we could have probably played on a bit earlier, and definitely we would have seen a lot faster growth. But there's always a scope of improvement. Right? I think in general we've been faring well. Of course, West has moved fairly fast in some of these areas. West in general startup ecosystem is a much longer legacy compared to India, where it's still a very very evolving, I would say, vertical by itself. Right? I mean, the VCs also have not seen continuous cycles that they are used to see in the West yet.
Sure.
So I think by that yardstick, we are making progress, but certainly scope for improvement, right, compared to
Got it.
some.
And the cost advantage with China, Abhishek, what about that? Are we catching up on that too?
So see, I think I mean the patriotic Abhishek in me says, "Oh yes, we'll do we'll do hell better than them," right? But the short answer to that, Neil, is that it's going to take time. They have built that supply chain and that manufacturing base over the years. Right? They have a huge local slash domestic demand. At the same time, they've been fueling a lot of global demand. Now, of course, because of certain reconfigurations, now there is a pressure on other countries as well as opportunities for other countries to kind of build that base, right? But the groundwork is getting started now, or it would have gotten started maybe a year back. It's going to take some time for us to start seeing the same economies of scale, scope, technology maturity, IP being built out, millions of chipsets coming out of it, or for that matter, any devices coming out of anywhere, because the manufacturing by itself needs some sort of a standardization. Also, the setup, if you see, we have a lot of small, medium enterprises as manufacturing players, right? So how do you kind of stitch the power of some of these long tail together is going to be very interesting, which in some form government has tried to do on the ONDC side, bringing all the local merchants together, right? I mean, the long
Right.
tail merchants together. So I think that's where very exciting times. Obviously, there I do fundamentally believe the pace with which we are now thinking and acting has improved dramatically. Uh, but I don't think India needs to worry much about China, at least for the short to medium term, because in general, like I said, there are certain geopolitical pressures because of which India has this opportunity. But the window of opportunity will be small. So it's the question is, how quickly can we make the most of it?
Got
Will
it.
be very, very critical.
Got it, Abhishek. One of the things that we were covering during a conversation, Abhishek, was value realization, and that also makes me want to spend some time during this conversation with you talking about exits and other things, especially knowing the kind of exits that you have had. In fact, I've made down a list here to call it out for the audience. So, early investors into unicorns such as Dartenbox, Curefit, and then like some Sunicorns too, and some really well performing startups, be it Steradian, Kisht, um, Milo, Skirt. So there's a long list. So would love to spend some time talking about it. Let's begin with understanding the importance of exits for the VC ecosystem.
Yeah, yeah. No, I think. See, I know it. For some of us, it comes out very naturally, and it's like, hey, it's common sense. I've taken money from you, I'll have to return it back, right? But I think it's also equally important to understand the cycle and why it's important for having a mature ecosystem, right? The whole funding ecosystem. So, if you look at it, exits are an instrument to creating a virtuous cycle of sustainability, towards this whole investor landscape and startup landscape need. So, we as investors, we take money from our LPs. LPs are like limited partners, which, in simple words, I would say they are our investors, right? So they've invested their money with us, and we promise them a certain amount of return. Of course, there's a risk involved in early stage investing, so most of these investors are well versed with venture capital as an asset class, but still, a lot of them, they need kind of that guidance and coaching and that evangelization. But at the end of the day, I mean, for you to be successful as an investor, you are supposed to not only give them back the principal, but also give them back a tidy profit, right? Which is what then gives them confidence that this, as an asset class, I can start looking at from a continuity standpoint, right? And what ends up happening is that most of the time, the profits may go back to their kitties, but the principle is something which becomes a part of the continuous cycle. And whether it's fund one, fund two, fund three, fund four, I think that continues to be there, and which is extremely important to ensure certain amount of sustainability, which I talked about in this whole startup funding landscape, right? So it's as simple as that. I mean, it's kind of a way to create value realization, and then not so much, just build a hype around the MOICs, which is the multiples on invested capital or the paper valuation, right? At the end of the day, you need to kind of get the hard cash back and return it to your investors, so that they see value in this as an asset class, they see value in you as a team, and then more importantly, they get encouraged to infuse a lot more capital, because that's what you need for a thriving startup ecosystem. Right? So that's why
Got it.
exits become extremely critical.
Can you please share some of your past exits?
Yeah, so I think, I mean, as a fund, while we're a young fund, we've been fortunate to witness some global exits, already. So one of the most, let me start with one of the most recent ones. Neil, we had invested in the company called Stradient, which was fabulous semiconductor company, building an imaging radar as well as the chip for the autonomous world. They last year got acquired by Radware, which is a Japanese Nasdaq listed, almost blue chip semiconductor company. Then, sorry, Renaissance. They got acquired by Renaissance, which is the Japanese Nasdaq listed company. Then we had Shield Square. Shield Square was in the cybersecurity side. They were more like building a SaaS platform for bot risk mitigation and for the internet world. They got acquired by Radware, which is an Israeli company again listed on the Nasdaq side, but one of the big three sort of CDNs, as well as the cybersecurity company globally. We've also been fortunate to see an exit from one of my previous investments in a company called Style Crazing Cut, which our stake got acquired by a Japanese listed company, iStyling, which was again a $1 billion plus company, in Japan on the commerce side. I have been a part of another transaction where the company Little Eye Labs, we had invested in Little Eye Labs, which became the first acquisition for, and the only acquisition till date for Meta, which erstwhile, Facebook, of course. So, and then we've seen, one or two in India, right? Uh, I think these are, while these are few of the exits, but interestingly, that has also kind of taken us in different parts of the geography, right from Japan to Israel, to pockets of Europe, and then definitely US, and then also in our home ground in India, right? One of our companies got acquired by Netco. So that way, yes, I think seen too many things too soon, I guess, but we've been fortunate.
That's a very impressive list and a very impressive number of exits to have their successful exits for such a young firm, Abhishek. Any chance you can give us some insight into the numbers?
Yeah, numbers. Unfortunately, a lot of these companies, so almost all the companies are listed companies. I think they're going to sue us left, right, and center. These are confidential numbers, and I think we see the reason also. Why do they want to keep it that way? But what I can say, Neil, is that there had been a very very strong synergies in each of these, which was very heartening to see, because sometimes at the end of the day you end up seeing a lot of mergers happening because there is no other option. And sometimes these are very bolt-on acquisitions, right? With more of tactical than of strategic reasons. But I think what was extremely exciting to see is where they could see value in simple sense. One plus one, how can that become three or 11? Is what we got to see. So very very happy about that and excited for the team that kind of pretty much had given up so much to build these, right, from ground zero.
Mhm. Sure. Um, so tell us something, Abhishek. These were really successful exits that you've had, and as you just called out, some of these are like deep science, deep tech companies. So when you were, in fact, putting in your money, how did you go about doing the due diligence, and what happens? How did you take that call? How did you trust their technology or whatever solution that they were coming up with?
Yeah, so I think yeah, that's a great question, Neil, because fundamentally that's what any investor of ours would also like to know, right? Especially when we are making some deep tech bets or deep science bets. So there are two sides to it, Neil. One is of course we have our own decision making framework, where
Mhm.
we look at the size of the market, of course the strength of the core strength of the founding team, and by that what we mean is their understanding of the domain, their network in that domain, right, Rolodex in their domain, and their capability to build a world-class team, right, altogether. Because as they scale, I think they'll have to hire a lot more for critical positions. Two is the whole IP around the tech. So what's the IP and what's the competitive moat around it, right, that they've built. Right? Fourth is what's the potential of a follow-on investment. I mean, having some visibility as to where or who would be the right set of investors to put in the next round of capital. Because given the stage that we come in, it's almost hard to imagine that the company will become self-sustainable by then. Right? And then, what are some of the external regulatory implications, if any, for that matter? And then finally, having some view, I would say, on the exit side, right? Would it become, would it have an IPO? Would it go towards an IPO route? Would it have a lot more strategic buyers? And given the way, certain industries are consolidating, who could be those buyers, and so on and so forth. So a lot of this is I would say a framework that we follow for any startup. Now coming more specifically to the deep tech and the deep tech side, I think the difference over there, while we have thorough diligence, I think for all the companies, but that's where I think deep tech, deep science kind of go in that extra mile, because finding the right talent who can help you also with some of these core tech diligence becomes critical, right? So for instance, in the case of Steradian, right, to name, so they were initially kind of building for the auto world. We had gone and spoken to some of the tier ones in auto. We had spoken to auto OEMs themselves. We had spoken to the ADAS units of autos, so like Harman and few others, right, who's building for Samsung. Then we had interestingly, one of the co-investors, early co-investors, also to bring in someone like Christian, which kind of captures the 60 to 70% of the ADAS market share in US for auto, was also driven by this fact, right? That how and where they can help the company from a market access perspective and the know-how and the domain perspective. So I think it goes a lot deeper with respect to the people who are part of that ecosystem, clear stakeholders, as well as have been working on that domain for several odd years, right? So that's where I think this whole deep tech, deep science diligence is kind of matures and evolves, right? Yeah, I would say that's how we typically go about it. And finally, like I mentioned, I mean, at the end of the day, in our heads, we need to have a clear sense of the business model. In our heads, we need to have a clear sense of the next round of investors and so on and so forth.
Got it. So a lot of aid from top experts in the world goes into it. Got it.
Yeah, I
Uh,
think I think sorry, one thing which I would want to also add to that, Neil, is that for deep tech, more specifically for deep tech, I think since majority of them, at least all the investments that we have done, have been built for global markets. It's one of the most critical and yet underrated things I've seen, even from the founders' side, is that they they having a clear knowledge of competition outside. I think they also generally go by what they hear, what they read. So unless and until you are part of that system over there, right, there is always that blur. So having that market landscape very well understood, especially in that global market where you're expected to service or launch your product, right, becomes extremely critical. That is one gray area where we have seen that it could be a lot more improved, by the founders themselves and the entrepreneurs themselves. But yeah, I think equally or probably even more critical, right, while building
so
this.
does the founder come to you thinking about when they're going to take an exit or like give you an exit or things like that? Or at what point of time does that discussion come up?
Yeah, no, we're very scared of founder who comes to us with exit in mind on day one, right? So we are here to build business, and we want to see a fairly scaled business, because for any meaningful impact, I think business needs to attain certain amount of scale. And even for that matter, you realizing a healthy exit fall back to what is the underlying business and the value that you have created or built, right? So no, I think the short answer is they don't. But at the same time, having a vision is something that we admire, right? I mean, if you have certain amount of clarity that what we are building, these are the pockets and these are the companies, and we have been following up their product roadmap, and certainly, this is one area where they would see a huge gap, right? And hence we could become very interesting and relevant to them. Should we have ABC in place? Is something that is always very encouraging because it's more pointing towards their understanding of the landscape, etc. Also, another thing, Neil, is that at least we as investors, we are a little less, while eventually it has to be a happy median between a demand and supply, for your themes and thesis to build. But we are still in that, I think we are more demand led than supply led, right? So we talk to a lot of corporates, we talk to a lot of blue chip companies, even before coming up with our thesis and themes, to identify those pockets of opportunities. And then we try to marry it with what is the local talent available, where could potential supply be, where probably some successes might have already been seen. And even if it's not, it could be a new category altogether. So that's why I think having that clarity, even from the entrepreneur's mind, is good. But certainly we don't worry and sort of get bogged down too much on finding an exit from day one. Having said, we are a fund with finite life, right? So at the end of the day, we need to kind of, like I mentioned, we need to kind of go back to our LPs and return the money. So we as investors need to have a very clear plan, in our minds, as company kind of scales and starts building value in terms of our own approach to an exit.
Got it. So let's assume that an exit is going to happen. So how does one prepare for it?
Yeah, I think let me start with one of the fundamental and practical, I would say, problems which probably get rolled under the carpet, and unless you've gone through it, you never realize it. I think the most important thing is to ensure that there is the founder, board, investor alignment. Right? Investors come in different times into a company, at different stages. Founders have their own, I would say, opportunity cost, right? And then you have the employees as well who are holding ESOP, taking very basic minimum salary in the expectation that a huge value realization will happen through the ESOPs. So, not that everything needs to happen today, but the point I'm trying to make is, I think the the zero step, if I may say so, right, which comes before step number one, is to make sure that there is complete alignment across all the key stakeholders, even before you approach towards any sort of exit. Because the moment there is a misalignment, I think you can do a lot more damage, right? With multiple voices and noises going out, I think that can just kill the company in just no time. So that's the fundamental thing. Two is, taking cue from where you left me, which is, assuming that there is an intent. Again, uh, I think the idea, at least from my side, it's not so much to stage manage everything, but rather to think of it right from day one. And these are certain good, rather I would say best practices even while building businesses to keep in mind. Uh, it should come more organically and naturally, right? So, for instance, first of all, you need to make yourself aware, right, to people. I mean, you might be building the best of the businesses, great revenue generation, profitable, but if nobody knows you, nobody would even come to you, right? So, especially, I'm talking about the global sort of buyer. So, from that perspective, you have to make yourself discoverable. So, which means that there are certain elements which you need to keep in mind. You need to have a certain amount of presence in the geographies of your interest. That's point number one. Two is you definitely need to be seen in the circles where most of the CIOs and CTOs, for example, the analysts, the Gartners, Foresters play a good role. They should sort of feature you if possible, right? So getting featured, and this has got nothing just to do with exit. This is also extremely important for building any enterprise business, right? And you're kind of expanding in the US market. That's how you can make yourself discoverable, right? So getting that good word of mouth through analysts, through your customers, existing customers, partners, also help. I think interestingly, what we've also seen, at least in one of our companies, global partnership is a slightly light touch way to get yourself out over there and make yourself discoverable, right? Because you tend to not only get to learn the softer aspects of working with those teams, which kind of builds the chemistry. You also get to see the real business cycle, right? How do they work and how do we work, and is there value getting created, etc., etc. So I think firming that partnership kind of helps, early. So that's the discovery part of it. Of course, then comes the aspect of How do you make sure that this is the right time for me to go for an exit? Because as a good company, you will keep getting offers every now and then, right? You will keep getting poached every now and then, but you have to decide the time. One of the things, one of the basic principles that I follow, Neil, is that at the end of the day, your job is to maximize shareholder value. Right? So the moment you feel an acquisition is the right way for me to maximize shareholder value, I think that's the time you kind of have to, take that approach, right? And go with that full intent and make the effort. So that's the that's of course the first step. But I think it becomes equally important for you, when you're deciding that who could be the potential right partner. And that's where a bit of a demand generation element comes into play, that these are the partners whom I have worked with, this is where the industry is heading, because that that's where you'll probably see the highest value, right? So in simple terms, it's kind of oversimplifying it. Finally, where I would say, final but one, obviously, while you're going through all these things, you want to approach this from a position of strength. So you want to make sure that as a business, you are making good progress. There's a steady momentum, and the focus is not lost at all. So which means there has to be a dedicated person who could be doing it. And again, if you look at it, right, Steradian had 5 co-founders. Little Eye Labs had 5 co-founders. Uh, I think Shield Square had 3 co-founders. So that's where it becomes extremely useful. Where one of the co-founders says, "Hey, I'm going to stand up and champion this transaction, while you guys make sure that the business is running, right, and running at a healthy pace." As a single founder, I think that's where it becomes extremely difficult unless you have a world-class team to take care of that. Right? So I think you have to be playing it from the position of strength, which is make sure that there's the right set of momentum, and it's kind of the business is moving on the right side, and so on and so forth. And finally, make yourself a mini project plan. You cannot be at it forever. You cannot be a bride in search of groom forever, right? I think after a period of time, you need to call it out that no, maybe this is not the right time. Let me go back and just have a singular focus on just building the business, and we'll revisit this in future, right? So I think by that perspective, it just ensures that there is the right amount of effort and bandwidth being given to it, and not something which disrupts your natural business building and the organic business building. I know a lot to absorb, so I'll pause here. But these are some of the traits what we have seen working well in the exits that we have realized. And also, if you come to think of it, these are traits which anyways help you to build a business as well, right? So if I kind of just summarize this very very quickly, Neil, for our audiences, of course, it starts from discovery. You need to make yourself discoverable. Follow certain traits, right? Then you need to kind of decide this is the right time or not. Should we wait, and who could be the right potential partners? Three is that you need to have the right bargaining power. So always play from the position of strength. Never sort of get defocused from business building, right? And fourth is make sure that you have a very tight project plan, if indeed you get into a transaction, so that it doesn't seeps over, and it doesn't over consumes your bandwidth and effort. These are 4 key things which we've seen work out well for our companies.
That's insightful. Thanks for summarizing, Abhishek. That's a lot of good information for a lot of entrepreneurs out there who are thinking about exits. You've also been part of many boards, right? So what goes on in those boardrooms during these phases?
Yeah, a lot of fist fighting, I guess. No, I think, like I said, if it's very clear, if there is no alignment, I don't think any company can very confidently approach the exit altogether. So it has to start from that alignment, overall, and then there are a lot of such milestones where again you need to make sure that there is a proper communication. There is the bad news kind of getting served faster than the good news, right? And that's how you kind of win also confidence and credibility. So there's a lot of ideas being floating around. I mean, they keep getting floated around. There are a lot of styles that keep getting talked about. I think it's very important for you as a leader who's driving the transaction to take the call on the end decision. That's point number one. Point number two, I've seen where there are multiple investors. I think it helps to have a common voice, speaking for all the investors. Because otherwise, there's just whether it comes to pricing, whether it comes to choosing the right partner, whether it comes to maybe for certain provisions, clause in the terms, etc. There are so many areas where there could be like multiple discussions, and the voices could get lost, right? Or it could just get too confusing. So that's what essentially it boils down to. Just have a right communication, timely communication, point of contacts, and overall alignment placed during this entire process.
Got it. There are a lot more questions, actually, Abhishek, that we would love to cover, but in the interest of time, we'll have to park them for our next episode. Until then, any closing comments from you? Anything that you would like to share with the audience?
No, I think overall, Neil, which is a hard fact now. I think we are just sitting. I feel sometimes I feel very jealous of or envious of the current generation because this is the best that they could get. From the overall ecosystem to really build a meaningful business, right? So, and which is why you see now a flurry of entrepreneurs, first time entrepreneurs coming fresh out of college, not really not fearful, not scared of jumping right into building business. I think from my perspective, just be very focused. This is a good time for you to be an entrepreneur if indeed you are thinking hard, and if you are not, you don't have any strong ideas or opportunities right now. I think go and spend time, be an operator. Go and spend time with businesses which are moving and growing at a rapid pace, right? So that you get to learn certain softer traits of what it takes to build a business, call out hard decisions, etc., etc. I don't think there'll be ever a better time, given where as a country we stand with all our bargaining powers and geopolitical, strengths, to even inside as a startup landscape, we have a fairly thriving ecosystem. Of course, some needs to evolve and mature, but I think this is the best time. So, just unlimited dream here. This is like really India unbound. Just go for it.
True. That's very true. Thank you very much for your time today, Abhishek. Really loved the conversation. Um,
Thank
until
you
then,
so much, Neil. I think pleasure, like I said, pleasure being here, and very insightful, questions coming from you. Thanks a lot.
thank you. Have a great day, Abhishek.
You too. Take care.
Bye bye. If you like the conversation and if you have found it insightful, do like, share, subscribe, and follow Startup Chemistry.